APR versus interest rate. Do you know the difference? Well, stay tuned. We're going to give you all the details. Okay, so I went back and started looking at some of the videos we've done in the past, and long time ago, probably 4 years ago, I did a video on interest rate or note rate versus your APR. And what I've learned is a lot of people don't know the difference in the two. I actually got a call yesterday from a repeat client that I was talking to about doing a refinance, and they had the question about APR. So that tells me this is not something that is explained very well to people. So we're going to do that now. I'm going to give you the details of what it is. We're not going to go into how to calculate it because that's just a whole nother thing. But I'm going to tell you what it's for and how you can use it. So your note rate or interest rate that you see on a mortgage statement or on paperwork labeled 5.5% note rate is what is used to calculate your monthly payment. So that determines what your principal and interest portion of your payment is. And that is calculated based on the loan amount, your term, whether it's a 30-year, 20-year, or a 15-year note. Now, the APR is your annual percentage rate, and that is the true cost of obtaining that interest rate. So let's say you have lender A, lender B, and lender C. Lender A is giving you 5.5. They're all giving you 5.5%. APR for lender A is 5.6. Lender B is 5.7. Lender C may be, let's just go 6. How about that? So that tells you there's something that is throwing those or separating those three lenders, but what's the difference? Well, when you're calculating APR, there are certain fees that are factored into that rate. Typically, it's always different unless you're looking at, say, possibly a VA loan or something like that, where there are no lender fees. Your points you pay, processing fee, underwriting fee, anything like that is typically considered a hard cost passed on through the lender, and that becomes a fee that is used to calculate your annual percentage rate. So what that tells you is you as a consumer now know there is a difference between all the lenders you're getting rates from. The higher the APR, the higher the cost associated with getting that interest rate. So even though they're all giving you the same interest rate and your monthly payment looks exactly the same, your cash out of pocket is going to be different because lender B is charging you more and lender C is charging even more than that to obtain that same interest rate. So it is a great tool for you as the consumer, and that's why we are all required by law. When you see interest rates, we have to have an APR associated with it. Whether it's in the fine print or right there next to it, there will be an interest rate and there will be an APR associated with it. So you can actually determine, you're not going to be able to determine what the cost is associated with that. But if you're comparing apples to apples between two lenders, you can then determine who's charging you the most money for that interest rate. So hopefully you guys now have a better understanding of note rate versus APR. You guys have any questions, let me know. Anything you're seeing, let's say you have paperwork in front of you, I'm happy to go over with it anytime. But we are coming into the spring market, and it is very, very important to know exactly what you're getting and how are you shopping for those rates that you're getting. Hope you guys have a great day. Let me know if we can help you. Talk to you soon.